Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is October 25th. We are going to take a look at Owens Corning. This is out of the industrial sector. Let's jump right in. If you want to know more about this company, check them out at www.owenscorning.com. That's www.owenscorning.com. That is their homepage where I pulled this information from. I tried not to cover up any of the locations, but there are a couple down here right in Australia there that you can't quite see. But if you go to their homepage, you'll be able to see this map. You get world headquarters, installation facilities, roofing facilities, composite facilities, science and technology centers. Our story is not simply a history of insulation or building supplies or even the date of inventions and buildings. It's an intricate tale of innovation and growth spurred by reinvention, curiosity, and strong partnerships built over decades. I'm not going to read through all of this. You can definitely read through it here. They basically started back in the 1800s. There was a does it go into that really? At the turn of the 20th century, glass manufacturing was focused on containers. By the 20s, Owens Bottle Machine Company had a strong foothold in bottling. However, the advent of U.S. Prohibition and the Great Depression brought a series of challenges that drove the exploration of glass's other capabilities. Experiments with glass fibers led to the products such as glass block and notably the first glass mineral insulation. Convergence of glass and insulation led to two Americans then leading glasswork companies, Corning Glass Works and Owens, Illinois, to form a partnership in 1935 to share knowledge and costs to explore fiberglass developments. The partnership produced a variety of new materials, processes, and applications in glass and insulation. In 1938, the Owens Corning Fiberglass Corporation was officially formed. So formed back in 1938, they do have trace their roots back to the 1800s. Again, these two companies that predated them were in the glass business long before that. And that kind of goes into more detail. If you go in, like I said, into the homepage, you'll find more information about that. But they do have a worldwide footprint, as you can see here, and I think that's important. So if there is a slowdown in the United States, hopefully there is building going on in other companies, because this is a cyclical company and will be impacted by the cyclicality of building in nature, right? So whether it's businesses being built, schools, hospitals, office buildings, or houses, Owens Corning supplies products for those provides building material for those projects. So whenever we have a cyclical, like we do now, where building seems to be slowing down, especially residential building, because interest rates are so high, then companies like this will be impacted by that slowdown. So just want to be sure you're aware of the cyclical nature of construction in general. Now, the reason we are taking a look at them down 10.34%, we are talking about Owens Corning, ticker OC. Huge drop on the day. I'm going to take a look at a company whenever it drops this much to see if there is any potential value here, especially one that I own. And in full disclosure, I am long Owens Corning. This is one that I was buying, a year ago, much cheaper prices, and have not bought in a very long time. So it is one that I have been waiting to come back down, but I wasn't expecting big drops like this. It was at one point up almost 60% of my portfolio. It is definitely not up there now. We'll see that here in a little bit, but big drop, 10.34%. Close out the day at $110.60. 52-week range as low as $80.24, as high as $147. It is floating between the low and the high, probably a little closer to the 52-week high than it is the 52-week low. Average volume 786,000. Today was 2.1 million, and you can see that. Boom, big drop throughout the day, especially right in the morning. Just a huge sell-off. Market cap of 9.936 billion, a beta of 1.46, so they are more volatile than the overall market. Price to earnings ratio, PE ratio, very low, $7.83 per share. Earnings per share, EPS sitting at $14.12. Another one just like we saw with Polaris yesterday, where the EPS is much higher than the price to earnings. I actually like that. Very high EPS on this one, earnings per share. Earnings date was October 25th, so I'm sure something in the earnings did not, either that or the projection looking at the future outlook is not good. So you'd want to look at that and see what's going on here. For dividend is $2.08. They are quarterly payers, so divide by 4, though we'll see that here in a minute. Dividend yield is a little on the low side, 1.69%. My yield on this one is actually over 2%. I was buying this much cheaper back here in the 80s and 90s. We'll see my position here in a minute. Ex-dividend date was October 13th. We just passed that, so we will be paid out on November 3rd. That is one good thing about the downturn. Whenever I'm paid out these dividends, I will be able to buy more because the prices dropped. And a one-year target estimate, at least according to Yahoo Finance, of $159.54. So they see it actually setting a new 52-week high. So perhaps this is the time to take a look at it again, because a big drop means your money will go further in this one, even though I would like a bit more of a drop because it's still not under my cost basis, but might not get back down there either. Now, I like to go into statistics, look at dividend yield theory. To do that, we go down to dividends and splits. We look at the 5-year dividend yield average, 1.47. We compare it to its current 1.69% over here. Same thing, forward annual dividend yield. They're the same number, 1.69%. And since it is higher than their 5-year average, that speaks to some undervaluation, right? These are inversely correlated. So if the current dividend yield is higher than the 5-year average, it's undervalued. If it was lower than the 5-year average, it would be overvalued. Now, one of the things I really like about this company, very, very low payout ratio, 12.32%. So that means they have a lot of room to increase this dividend, continue to pay down debt, make acquisitions, reinvest into the company. So just a lot of free cash flow that is not being utilized to pay out dividends right now. And like I said, my cost basis on this one is over 2%. But we'll see that here in a little bit. I like to go into financials. There's a lot of good information here. Balance sheet, income statement. You can find out their debt levels, their assets over liabilities. Are they paying down debt? Are they buying back shares? We want to look at free cash flow. We want growing free cash flow over time, because we want growing dividends, and dividends are paid out of free cash flow. So 2019, $590 million, 2020 up to $828 million, 2021 up to $1 billion, 2022 up to $1.3 billion. So this is nice, steady, continued growth. That's what we like to see. And currently, at least as of the recording of this on October 25th, $952 million. And so not only are they increasing their free cash flow over time, significantly so actually, they are also increasing how much shares they buy back over time, right? I'm assuming they're going to beat last year's record. So you can see this repurchase of shares. So very, very good numbers on this one. I really like this company. It's in an industry that I'm very familiar with. I manage several construction managers in my job. I've been in construction since long before I got paid to do it. So this is right up my alley, this type of company here. Let's keep going. Now, I always recommend more than one source. So what we were looking at on the previous page was Yahoo Finance. I'm not affiliated with Yahoo Finance, but I always recommend more than one. And stockanalysis.com is another one that I like. Now, you pick any sources that you like. Just make sure you're looking at more than one so you can back check the information you are getting is accurate and up to date. You can see here they updated as recently as September 8th on this one. And the 15 stock analysts that have taken a look at this from stockanalysis.com call it a consensus buy. I'm on the fence on this one. I am tempted to start buying again, but it's above my cost basis, and I kind of want to see if it's going to pull back a little bit more. So maybe not necessarily a buy for me, because I see this low estimate they have here of $90. I'd love it to drop back under 90, and I would start adding again, and that would be a 18.63% decrease from where it currently sits. Average estimate of $134.93, which would be a 22% increase from where it currently sits, and a high estimate of $185, which would be a 67.27% increase in the stock price. All the while, you could collect that 1.6% dividend yield. Now, I like to get into statistics here and look at return on invested capital and return on equity and see how a company is doing reinvesting its own capital. And I like 10% or better for both of these. Return on equity of this one, 27.8%, smoking the 10% that I look for. Return on invested capital, 15.65%, so above the 10% I look for. So very good numbers overall on this one. I also like to look at forecasted earnings per share growth. Unfortunately, they did not have it here at stockanalysis.com, where I typically pull it from, and they did not have forecasted revenue growth, and I'm wondering if that's because today was their report out for their earnings, so maybe this has just not been updated. Again, having been updated September 8th, they would not have the most recent update, so I'm assuming that is why that is. I'm going to check back on this one here in the next few days, over the next week or so, and probably see if I can find out what they do estimate, or what I'll probably look at the earnings report too and see what their estimates are going forward on this one. Now let's keep rolling. We're going to look at the dividend here. As I said, before we get into that, I did want to, full transparency, I do own Owens Corning, so I am long this one. I do have 44.39 shares, right? My cost basis is $91.71 per share. So again, if it was under 90, I would definitely be adding to this. That would be under my cost basis. I am still up 20.6%. Currently at $110.61. Just I want a little bit more. I have $4,071 into it. Currently, it's worth $4,909 if I was to sell out and book some of these profits. I actually almost did whenever it was up about 58%. I was going to cut this in half and keep 22 shares and then wait for it to come back down. I kind of wish I would have at the time, but I don't like to sell positions that I'm long in, and this is one that I am long in. I just really like the company. Payout ratio, again, extremely low, 14.68%. Now, here's another thing that I really like about this one. Dividend growth. Look at that. 48.57%. Smoking high. If you are looking for one that is a little bit on the lower side at a starting yield, but has smoking high dividend growth, this is one, as well as the rest of the numbers looking good. This right here, that's one of my favorite things to see about this one. Really smoking high. October 19th, 2020, they were paying 24 cents. January 7th of 2021, they jumped it up to 26 cents. January 6th of 2022, they jumped it up to 35 cents. And January 3rd of this year, they jumped it up to 52 cents. So you can clearly see they are definitely paying out some nice growing dividends on this one. And if it was to pull back in this 91.21 range, my yield on cost on this one is over 2%. So you could get this one over 2% if it dropped back into the 90s with this type of dividend growth. Very, very nice to see. I really like this company. I hope it does pull back further. I'd like to build this out to 100 shares. We'll see what it does over the next couple weeks. This is the vested interest stock screener. You can pause this and go through it at your leisure. This is how I set up the videos. It also is how I look at a company like Owens Corning to see if I want to add it to my portfolio, if it's not already in, or if I want to continue to add if it is already one. And if, sometimes whenever it doesn't meet these, it might be a reason for me to reevaluate and see if I should sell a company, right? So that it does a couple things. It helps me buy something that I'm looking for, keep investing in something that I'm holding, or potentially remove something that no longer fits my investing criteria from my portfolio. Well, that is it for this one. Let me know what you think of Owens Corning. Is it in your portfolio? Is it one you're looking to add? Is it one you're avoiding altogether because of the cyclical nature of construction? Really up to you, but I would like to hear from you. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors, sharing stocks like this that we may be looking to buy, looking to add to our watch list, or again, looking to avoid altogether. If you are a dividend growth investor, go ahead and hit that subscribe button down below and join us on this journey to financial freedom. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover, like Owens Corning, drop it in the comment section below and I'll work it into the rotation and make a video on that one. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks. You can lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of a completely certified financial advisor.